Hey there! In this video, I'm going to show you an exact entry model with order blocks. It's called 3-pin entry, utilizing the ICT order blocks. I learned this from a super pro trader and he was killing the market with it. So please watch the video. It's not going to be a short one, but check it out. I think these kind of entries with ICT order blocks are just killers if you know what you're doing. All right, so check it out. Okay, so let's just dive into it. Here are a couple of bullet points that are required to actually pick out the best type of order blocks intraday. So let's dive into it. I'm going to show you some examples, and it's actually just going to be from the past few days, so nothing extra. And I'm going to show you the exact entry. Most of these order blocks are going to be picked from the 5-minute, and I can show you how I go down to the 1-minute and actually take those entries. So first of all, it's important that what kind of order blocks do we need? It's important that the order block needs to take out a form of liquidity. So what do I mean by that? The form of liquidity can be a fair value gap, like buy side imbalance, sell side inefficiency, or sell side imbalance, buy side inefficiency, as we all know it with smart money concepts or ICT. There is liquidity there. Or it can actually take out a swing high or a swing low, or actually it can also form a swing low or a swing high in itself. But I'm going to show you some examples. Also, very important that it has to do, of course, it needs to do a valid market structure shift. Let it be bullish or bearish with a down or up close candle. It's very important. And if you want to make it through the week or the month, it's definitely important to have a good risk reward. So try to aim for at least minimum of 1 to 2. Worst case scenario, you should be able to aim for 1.5, but I usually aim for 1 to 2, or even more if you have a significant high or low as a potential target. Okay, it's up to you if you want to take partials or not, but let's just go into some examples. So form of liquidity, fair value gap, for example. Let me zoom this out. This is Nasdaq. I don't even know where we are. This is January 5. Who cares? So, for example, and I don't want to disrespect anyone's theory who is having a little bit different approach to order blocks. This is my approach, and the entry model is also a little bit different, but you guys will see. So here, let me show you is an order block, or here is an order block, or actually let's just say here is an order block too, right? Or even here. So order blocks are actually all around the place. You can find these intraday, technically every day, and I love a system when you can find a special patterns which are repeating themselves, because then you will know what to look for. So in this case, a form of liquidity, what we're looking for here is actually right there. What do we see there? There is a fair value gap, of course. Takes it out, this down close candle takes it out, moves higher, there you go, market structure shift, there is your order block, bullish. So form of liquidity. Or same scenario right here. It's a tiny one, but it actually valid. It took out liquidity right here, went up, and then boom, went down. Okay, what else? Right here, this one took out the swing low, pushed down, and then went up with a nice market structure shift as well. So that's also a form of liquidity. We do have all the criteria on these order blocks: market structure shift, liquidity, whatever you want. But the entry, the exact entry, is a different. It's a different scenario. But let's just dive into that. Well, so these are the main key factors. You should note this, or pause the video, or note it, or whatever, because without one of these, you don't really need all of these to be present. The more it is, the better. But if you have at least one of these 3 criteria here, then actually it fits the purpose. All right, so let me reset this because I have already made a little bit of a carving here. Okay, so there you go. Let's go over from, actually, which day is it? It's Wednesday, January 24. So let me put this right here. Okay, so Wednesday 5-minute chart. This was actually, well, yeah, it is. So this order block is actually formed during, well, right at the end of the London kill zone, but this is going to be interesting. Right there. But after that, we had another one formed between the London and the New York kill zone. So I marked these up. Bearish market structure shift. Let me change the cursor. So bearish market structure shift here as well. And also, oh, I didn't even mark this up. So bullish market structure shift right here. Let me check it. There. So bullish market structure shift. There you go. Also an order block. Okay, so how do we utilize these order blocks? We see them. If you can identify them, you already made most of the job. Okay, so these ones, actually we have one here as well, but I'm not gonna go into this one because this happened. This actually didn't really move anywhere. It just kept going down. So this move up here went into only 2 ticks into this order block. Now ICT says that technically the order block starts from the wick of the candle, from the first up close candle, which is this one. Let me change the cursor again, which is this candle right there. So, but the best and the safest way to utilize it is if you measure it from the body. So the open of the body is actually 874. So what happens here? We have this candle at 9:35, which has the high of 874. So it's perfectly touching the body of this first up close candle, but it technically goes into the bearish order block. So after this move here, if we go down to the 1 minute, and let me mark it up because this is gonna be, let me give different color here. I'm going to give a blue color in case I missed this, and I'm gonna delete that after that. 9:35 Wednesday. I love TradingView. 9:35 Wednesday. Let's go here. Okay, this is why I love TradingView. So this was the time, this 5-minute period here, where it actually poked into, which happened at 9:38. 9:38, this candle poked into that fair value gap up there. So right up there. I know it's hard to see, but I hope you guys get the idea. So that's when it happened, right up there. So this is what I call, and actually this is not what I started to call, but they call this 3-pin entry. And what do I mean by that? It's not that difficult, it's actually simple. All you have to do is look for a swing high. Now, what do you need for a swing high? All you need is 3 candles with a swing formation. So you have the middle candle with the high, a left candle with the lower high, and the right candle with a lower high. So this is the kind of formation that we're looking for, 3-pin formation. The bigger the wicks are, the better, but it's not that big a deal. Now, what you can do is actually use it in a little bit more aggressively. If you want to use it in a safer mode on a 1 minute, especially on the slow day, I really don't recommend it. But you have this candle here, you have this candle here, and you have the third candle. Oh my god, you guys can't see it like this. Okay, let me try something else. So the third candle on this one is the 939. So if you just go to your chart on January 10, 939 Nasdaq, you're going to see the third candle. Now, these candles formed a nice 3-pin swing high. Okay, so the fourth candle starts to form, and I would say we are breaking. It's not a clear structure, but if the fourth candle starts to break the low of the previous 3 candles, which is happening from the 936 entry, sorry, 936 candle, it starts right there. So it starts at 860. This is the low of this 3-pin formation. I mean, it's not that accurate, sorry. Let me look at it again. The low is 861. So let me just put it to 861. I don't want to put this to a long video, but it might going to be. So 861 is the low. Anyway, 861.50. Nice. I love when I'm so accurate. Okay, so 861. Now it goes down and breaks it. Your limit order, which is going to be a sell stop here, it's going to be placed here or maybe one tick below. But what I'm going to show you here, if you put your order here, stop loss should be tight. You should go with a tight stop loss, because if it trades above this high, it's most likely going to fail anyway. So why should we use a wider stop in this manner? And this is the 1 minute entry. So you just have to go for at least, if you can, to a 1-to-2 risk reward ratio. And there you have it. A nice short right there. And it happened after market open, so right in the perfect kill zone. It was a nice trade. Of course, you still have to know market structure. You still have to know, you have to be aware of the daily bias. What I'm showing right here is actually unbiased. I'm just looking for example, but I hope you guys get the idea. So you went down to the 1 minute, found that swing high with a 3-pin formation right there. You entered on a short here and took at least a 1-to-2 risk reward. You see, nice swing low has been taken. But you can also target lower swing lows. I mean, it's up to you. It's your risk management. You should decide. What I'm saying, you should be going for at least 1-to-2. All right. Okay, let's continue. If I go out again, and actually we're gonna have some losses as well. We're gonna have some losses. Where were we? Okay, so we took a short here and it was a nice trade, and then around 950 we started to poke into 950 to all the way to 1005. We started to dig into this, not too perfect because it's not the best one, but we started to dig into this bullish order block on the 5 minutes. So we're going to zoom down again to 950 on the 1 minute. Okay, I promise I'm going to go as fast as I can, but I do have to show this. So 950 to 1005. At least I'm going to show you some losses as well. Okay, so there are things that you can do here. First thing, this candle poked into the bullish order block at 951. So this is the first candle, the middle candle, and the third candle. Now what you can do is actually enter here on the fourth candle when it is breaking this here, but this candle's high was a little bit up there. So in this case, because it had a strong dump here into this order block, and the high of this candle is a little bit up there, I would wait for it to form a new 3-pin formation if it can. So again, this is a swing low, but the first candle has a really high body there. I would not use this as an entry. It's not a perfect one. I'm looking for a nicer formation to go. So it happens after that, as it goes down again, we have the candle at 9.55, 9.56, and 9.57. So now we can utilize on this one. After closing it, we can enter to a long position right here. But I'm going to tell you why would this be again a little bit dangerous. And as you can see, it takes the stop. Price was very close to this swing low. I know I'm 100% sure that I would not take a long here, because even if I see this, it's so close to this swing low, this 9-hour swing low, that it would be very, very risky to take a long position even on this order block. So I would like to see this low being taken out, and that's why I'm saying you have to know market structure before you make the final decision. Even if you see the order block, you have to take these things into accounting, you know. So but even if I take this trade with a 1 to 2, we lost 1 hour. So we made 2 hour on this, we lost 1 hour on this one. All right, you can still say that, oh, okay, I might gonna take a second chance on this trade because we're still inside this bullish order block. I'm not even sure that we closed out on this candle, because yeah, we didn't. So if we would have a down close candle on the 5-minute outside of this bullish order block range, then I would say that, okay, I think this has been totally disrespected, so I don't really want to take a new long on this one. Oh my god, this is going to be a long video. So so the 3 candle, let's look at it. 1, 2, 3. First candle 10.04, 10.05, 10.06. So we're going to enter to a long position at the break of these candles, which is going to be somewhere around here. The high of the 10.04 candle is going to be somewhere around here. Stop is going to be there, and the risk reward is at least 1 to 2. So as you can see, it's a 2R trade. Very, very nice. So we made a short 2R -1 and +2. That makes us +3R on this one. Okay, now let's just go a little bit faster, because it is really going to be a long one. Now, if you want to take some extra risk, I mean, if you're up 3R on the day, you can also choose to stop. But look at what happened. There is a possibility from this bullish order block that I outlined in the first part of the video, from the London kill zone. It's not a perfect one, but what it did, it formed a swing high. As I said in the criteria, it made a swing high. So it's technically valid for me. So let's look at the 10.50, or actually, yeah, around 10.55 to 11.05 area. So as you can see, yeah, it's a little bit of a difficult situation here. You know, you can take one here if you want to. Let's just be aggressive. All right, you entered on this one, but again, I would not enter it here because it barely touched it. But let's just say I want to see at least a wick go into this one, so I'm not gonna count this. I need a candle to go into the fair value gap at least a little bit. So we have a 3-wick formation here. Did not broke it. Did not broke it as well. Nothing broke it here. The first, when it got broken on, was on this candle. So you see, the 3-pin formation helps you to narrow down a little bit of your entry points and helps you out. As you can see, it also has the risk reward for 2, and boom, you can have it. Actually, it's outside of the New York AM session kill zone, but you know, it's still valid. So it was a little bit of aggressive here, but you could still take it. I'm not going to zoom out again because it's time consuming, but there was a 5-minute bullish order block here as well with market structure shift. Price went down again into it. So 1, 2, 3, this one broke structure again. So the entry point is going to be here. Just check it out on the 5-minute at 11:50. Okay, the order block was forming from 11:25, so you can check it out for yourself. 1, 2, 3. The break of these 3 candles should have been around here. Stop loss is down there. Aim for 1 to 2, which is going to be, well, somewhere up there. And there you go. You could have it in the lunch hour. There you go. So we're just doing 1 day here, and we had 2R, -1R, +2, that's 3, +2, that's 5, and +2, that's actually 7. So I think it's pretty much good for 1 day result. Okay. Same goes for these order blocks here. I'm gonna be real fast on this one. This is the other day. Pretty nice bearish order block. Took out quite a few highs here and then went down. It has a market structure shift, as you can see as well. Beautiful. If we go to 9:30, let's go to 9:30. Can we go to 9:30? And what is this? I think I just I left this one by mistake. This is not a order block. Anyway, I'm gonna check it out. So let's go to 9:30 there. Yeah, here it is. So 9:30. 1, 2, 3. You could have taken a short here. That's a -1R. Right there. That took you out, of course. Okay, boom, took you out. Actually here, that took you out. So then you can go once again if you're sure what you're doing. If you're sure, then you can enter once more. 1, 2, 3, the 3-pin formation. This one doesn't have a wick. I know. Personal preference, I like that we are pretty much in the perfect zone in the middle. It has some trouble. I would put a limit order here and go for a 1 to 2. I know it's much easier to do this and not in the live market, I know. But there you go, -1 +2. Okay, I don't know what the heck is this one. I think I put this by mistake here. So let me delete that. Okay. Market structure shift. I don't know why I put this here. Maybe it was a 15-minute bearish order block, but that's not what I'm looking for. But what I do look for is, no, it didn't came through there. I'm looking entries on the 5-minute. No bearish order block that we can take. This could have been a bearish order block actually, because it poked into liquidity. So you know what? We can mark it as well. It's going to be a loss. I can tell you that for now. Yeah, it's going to be a loss. But what else do we see? Nothing really. Okay. This is actually in the PM session. Now this one is interesting because it closed above the order block level, so it went all the way up to liquidity. Now also, this is why I'm saying you have to know market structure. If I see a lot of liquidity like here, I would be extremely careful to jump into a bearish order block entry right here, because I assume that price is gonna go up and take out this area, or at least reprice it in a way or something, you know. And so with this, especially in the PM session, you have to be careful about going short right away on your first entry. So I'm not going to go down right there. I suppose there could be a loss there if you go down to the 1 minute, but you still have to take this into accounting. And that's why I say you have to know market structure. You have to know all these levels and liquidity points, because if you just take all these trades blindly, you can still be profitable, but you know, why not minimize losses if you're just watching for these levels? Okay. And one more day, I think I marked this up. It's pretty nice here as well. I'm not gonna go down to the 1 minute, but as you can see, bearish order block on the 5-minute market structure shift. This went up. I'm sure I could find a 1-minute entry on the 3-pin formation up here as it poked into the liquidity. Look at this, boom, 2R. So that's also fine. What do we have? Multiple bearish order blocks here. And if you zoom down to the 1-minute, I'm sure you can find a 3-pin entry on the 1-minute. Let's just look at it for fun at 10.5. I'm sure this one was a 2R winner here. So bearish market structure shift after 10 a.m. Yeah, as I expected it. Look at it, perfect. Well, yeah, we have a long candle here on 10.07, so I would have waited with this one because 1, 2, 3, well, again, you have to decide if you want to take it or not. There is a structure here as well, a swing low. Now, this is also valid to take on the break of the middle swing low here. So if you wanted to take this as on a structure shift to the downside, you could have taken it. Stop loss up there, 1 to 2, boom, you have it. So multiple order blocks there. Also, there was one more. I don't even know. Anyway, and if you see this, we had this one from the morning, New York morning, and 1, 2, 3. Well, 1, 2, 3. Yeah, maybe a little bit wider stop. You could have taken this as well. So, for example, right up there, stop is there. Aim for 1 to 2 or taking out those highs. It's perfect for 1 to 2. Yeah, there you go. With the 1 to 2, you're exactly taking out this swing high up there. And so not all of these are picture perfect, but I hope you get the point. And again, this is not about you have to take blindly all the entries, because you have to watch the big picture. You know, you have to watch for the daily bias. You don't have to really overcomplicate it, but if you spend enough chart time, you are going to see how it works, and it's very profitable. I've been using it more and more in the past weeks and months, and it always amazes me at the end of the day when I look back, even at the ones that I did not take because I was a chicken or something, how awesome is to use these order blocks. You can also search for it on the 15-minute and maybe enter on the 5 minutes. It's personal preference, but I learned this from a very nice guy. Unfortunately, he passed away, but I learned this from him, and he was killing the market with this strategy. Really, guys, and this is the secret sauce. He was killing the market, and he was doing exactly the same what I showed you. He was looking for the 3-pin formation, exactly the way I showed you right now. Of course, you have to take structure into your entries, so you have to select. If you, I mean, don't go mad into all of the setups. As I just showed you, you can do some losses, but if you do a solid 1 to 2 or more risk reward, you should be fine. And let me know, please comment what do you think about this theory. If I was doing some mistakes, please let me know, because I'm curious what you think about the strategy, or are you using the same kind of entry? I really want to know about it, so please comment, and please like the video and check me out on the live streams every day, and grab some discounts on some prop firms, because it's really a good time now to start trading with prop firms. Okay, thank you so much for watching. Please drop a like and subscribe, and see you guys on the streams. All right, cheers.